So first, we're going to make some assumptions about you. A lot of talks have just kind of gone over over this law generally. We're assuming that you're a typical client that we work with. What does that mean? That you own a for-profit business or a 501c3 that was in operation before February 15th, 2020 of this year. You employ under 50 people. You made payments to employees via payroll, or you paid contractors and you issued 1099s. You've been impacted by the coronavirus. You're in Louisiana, and you're not a super new business. Again, you were before February 15, 2020, and you're not a seasonal business or a franchise with multiple locations. So if you just said yes to all those things, then a lot of this is going to apply specifically to you. Again, the specifics of this are going to vary. So first, we're going to start with one of the obligations, the thing that applies to you guys most. We're going to start with your obligation to provide sick leave to your employees. That's the Family First Coronavirus Response Act, or it's the Emergency Paid Sick Leave. And I'm going to let Vincent explain what this act is and how it applies to you as business owners.
Morning, everybody. So the Emergency Paid Sick Leave is applicable to every business who has under 500 employees. So it's fairly simple. If your employees cannot work or telework, you're required to pay sick leave. It actually comes effective on Thursday, April 2nd, and it applies to your employees, not independent contractors who've been employed for more than 30 days. Everyone needs to evaluate on an employee-by-employee basis, but who is applicable and what employees? So anyone under a federal, state, or local quarantine order for COVID-19 it applies to any employee, so everybody here. Or if any of your employees have symptoms, or if you have an employee that has to care for a child who's out from school due to a COVID-19 closure, or if they're caring for someone with symptoms. Paid sick leave, you have to give up to 10 days of paid sick leave or 80 hours for full-time employees. You cannot require the employee to use other sick time or vacation, and you cannot terminate, discipline, or discriminate against employees using this sick leave.
Also, if you're self-employed, you're entitled to this sick leave. So we're starting with this premise that because Louisiana is under a quarantine order, this law applies to us. So again, if you said yes to all those applicable things at the beginning of this call, this applies to you and you're required to pay sick leave. What we're advising you to do at this time is to create a spreadsheet of all your employees, and you're going to have to evaluate your employees on a case-by-case basis. Are they able to work? Are they not able to work? If they're unable to work, why? And based upon that reason why, you're going to have to calculate the sick leave they're entitled to based upon how you pay them. Are they hourly? Are they salary? And the percentages change. So again, we're not going to go into the details there because that's specific for every employee. But the resource we can point you to is the DOL.gov, Department of Labor. DOL.gov has an extensive employer-related section to this and breaks it down. So we want you to, again, think about the fact that you're going to have to evaluate this on an employee-by-employee basis and go to the DOL and see how these calculations apply to everyone. There is, Leonard, I see your question. So that there is an exemption if the requirements would jeopardize the viability of the business as an ongoing concern. What does that mean? We don't know yet. We haven't figured that out, right? We don't know what that means at all, other than that if you can't afford to pay it, you might not be able to pay it. But Congress has kind of come to the rescue of helping pay for this Family First Act in the CARES Act. This is the law that was passed and signed late last week. So how do we pay for this sick leave that we're obligated to provide? there's a tax credit that was issued in the CARES Act. If you are obligated to pay this sick leave to an employee, you are going to be able to get a tax credit for that. Basically, what Congress wants you to do is, rather than paying your payroll taxes, those taxes that you typically take out of your employee, that you as a company pay, it's not the withholdings, it's the company contributions to employee taxes, rather than submitting those to the government now, you're going to use that cash to pay this sick leave. And there's provisions in the CARES Act that say use this cash that you otherwise would have paid to the federal government, and then later on we're going to apply tax credits to that amount that you didn't pay to us as the federal government. So that is to say, is the interesting part about this is the federal government's put this obligation on employers to pay this sick leave, but then it's come around and said, hey, we're going to pay you to provide that benefit. So that's where this is really interesting. This was really scary before this tax credit came along. Now it's a little bit less scary. Again, the implementation and the practicalities of it are a little bit more complicated. So that's, if you have an HR company or a payroll company, they're going to be a big help in helping you figure this out. But again, our tip here is you need to look at all your employees and figure out whether or not they qualify for this. Again, I put a link, but if you want to go and ask questions about this, access sli.do, sli.do, and the number is P313, the presentation code, and we'll be looking at that at the end to answer some questions. Okay, so you also have this obligation. So you have this obligation to provide sick leave. What's another way that you can get cash to make sure that you're helping these employees? Again, think of this whole scheme is that the federal government is trying to use employers as a way of giving money to employees. The quick way to get some additional cash for this is the Economic Injury Disaster Loan, EIDL loan, EIDL. This is a loan that's available through the SBA, and it's an expansion of the 7A program that a lot of you are familiar with. You go and apply by going to SBA.gov, and there's a big link on the top that says apply for an economic disaster injury loan. You can use the funds for providing that sick leave that we just talked about, maintaining payroll, meeting increased costs due to the interrupted supply chains, making your rent or mortgage payments, and repaying obligations that cannot be met due to revenue losses. So this is a loan. As part of this program, as part of the CARES Act, they modified the loan program to say that businesses can apply for and receive a $10,000 grant within 3 days. The applications for these opened up yesterday. This law was put in place on Friday, and the SBA changed its whole application process to accommodate this, to be able to do that. So if you need emergency cash now, the quickest way you're going to get it, these tax credits and rebates and things of that nature are going to take time to come back through. But this $10,000 grant is going to be available hopefully within 3 days. It does not need to be paid back even if you wind up not qualifying for the full loan. So the way it works is you're going to apply. It sounds like you'll get $10,000, and then they're going to start evaluating whether or not you apply, whether or not you're eligible for the loan based on your credit score and credit history as an individual business owner. If you don't apply, you still get that $10,000 grant. And we'll come back to this later. Remember, you're getting $10,000 as a federal grant already. Keep that in mind because that's going to be important later on. What are the qualifiers for this EIDL loan? Again, if you said yes to all those qualifiers at the beginning, Louisiana business, under 50 employees, you're impacted by coronavirus, you're for-profit or 501c3, you were in operation beginning in February, and you've made payments to employees, you're going to qualify. There's a lot of things you have to certify, but long story short, the vast majority of people on this call will qualify for this. Finally, keep in mind that a loan amount, we've seen that a loan amount more than $200,000 will avoid the need for a personal guarantee. We deal with personal guarantees a lot when our clients are trying to do things, and they're never fun to get out of. So as you go through the application process, the application does not ask immediately how much money that you want, how much money you want or need. But keep in mind that as you go through that, you're eventually going to have to give a certain amount. And if you ask for more than $200,000, you'll likely need to give that personal guarantee. So that's the EIDL Economic Injury Disaster Loan. Again, that's available through the SBA. Now we come into the meat of the CARES Act. And this is the Paycheck Protection Program. This is the big forgivable loan that's going to be very attractive. Again, to look at as an outline, we started out with the Family First Act. It said this is the obligation that you're provided to provide benefits to employees. Then we said, hey, here's how you get some quick cash from the SBA on the Economic Injury Disaster Loan. Now here's the CARES Act where there's going to be more cash. So the SBA loan and this payroll protection program are two different things. The Paycheck Protection Program, the PPP, is not through the SBA. You're going to work with a local bank directly. So been on the phone with a couple bankers this week, and they are scrambling right now. They are all trying to put together a process to get all this. This is going to be a little bit more detailed of an application process than the EIDL. But in effect, the banks are working on putting out this application process now. So if you have an SBA lender that you're close with, now's probably the time to start reaching out to them and getting documentation together. We're going to go over what documentation we think you might need. But these loans are going to start to issue in April, as soon as possible, but no later than April 26th. Again, if you're checked yes to all those, yes, I'm a business owner, it's going to apply to you. And this also applies to self-employed individuals. We've been saying a lot about employees versus independent contractors. So far, everything we've discussed applies to both employees and independent contractors. So when I'm saying whether or not you have employees, Congress has recognized that there's a lot of businesses out there that are sole proprietorships. There's a lot of people out there who are gig economy workers. This applies to you all as well, even if you don't have employees. So how is the PPP going to work? First, you have to figure out what your payroll costs were for the past 12 months. So get together your income statement. And on your income statement, you're going to want to be able to show your salaries, wages, commissions, cash tips, any leave you provided, vacation, parent leave, family leave, medical leave, sick leave, severance pay, health benefits, retirement benefits, and state and local taxes. In other words, you're going to want to figure out how much you actually paid your employees in total, hopefully broken down by all those categories, right? If you have one line item that just says salaries and wages, you might want to spend some time over the next few days trying to figure out how does that actually break down into what I actually paid them in salary, what I paid in tax, or with health insurance. And go through that. So these should be line items on your income statement, and you're going to want to have that documentation to apply. It's not just employees too. Payroll costs also includes independent contractors if you issued them a 1099. So that's available there as well. Here's an area that we'll just admit we're unsure that this is going to happen. We have a lot of clients, a lot of them in the small business world they pay independent contractors who may or may not be employees sometimes. There's a lot of gray area there. But a lot of times we have companies who pay workers as 1099s. So we're still unsure about some of the specifics there. In other words, it seems like the company can apply for a loan based on the fact that it pays 1099s. It also says that those 1099s themselves can apply. So you could see how there could be this company pays a 1099, so the company gets a loan for the amount that it pays the 1099, and then the 1099 also gets a loan, which kind of is a double benefit there. We're not sure how that's going to work yet. We've tried to figure out that kind of conflict there, but that's something to kind of just pay attention to, and I think that answer is going to become more clear as we get into these regulations that are coming out from the administration. Those payroll costs we went through, it caps compensation at $100,000. So if you pay if all your employees and contractors are paid under $100,000, don't worry about the cap. If they are paid more than $100,000, you're not going to be able to claim payroll costs above that $100,000. You're going to have to prorate it. There's going to be a calculation there. So just kind of make a mental note that this $100,000 is going to be prorated in a certain perspective. This PPP amount is going to be based off employees, but their comp is capped at $100,000. Okay, so now we've got our payroll cost, and we figured out what that is. We need to figure that out for the 12-month period dating back to February 2019 or March 2019, about there. Figure out what that average cost is over the past 12 months, multiplied by 2.5. That's the amount of the loan that you're entitled to under the PPP. So if your payroll costs for that period are $100,000, average is monthly $100,000, multiply it times 2.5, that's the loan amount you're entitled to. The cap is $10 million. I don't think anyone on this call is going to get close to that. If you do, good for you. But that's the loan amount you're entitled to. Some of the details on the loan, this is exceptionally attractive to small business owners. There's no fees. You're not required to show that you cannot obtain credit elsewhere, unlike a lot of other SBA loans. There is no personal guarantee, and there is no collateral. So no fee loan, no collateral, no personal guarantee. Really, a lot of it is self-certifying. So the biggest thing, the biggest trip up we think businesses are going to have is making sure that your paperwork's in order to show this is what my payroll costs were, because the payroll cost is how they're going to calculate the loan amount for the vast majority of you. And this is where the forgiveness comes in, right? We've all heard about this big forgivable loan that's coming out. This is what it is. So we calculated the loan you're entitled to. You're going to apply with the local bank for that. They're going to figure out that amount. They're going to give you that cash. Now we need to use that money to get forgiveness. So to calculate forgiveness, your forgiveness is going to be equal to the cost you incurred and the payments you made during the 8-week period that begins on the date of loan origination. So you get that cash, figure out when the loan origination date is, then you're going to have 8 weeks to spend that cash. You can spend that cash on all those payroll costs we talk about, the typical costs of paying employees, although not every benefit is included. Most of them are, but not everyone. So you're going to spend that cash on the payroll. You're going to spend that cash on mortgage interest if your company has a mortgage. If you have a home office and you own your home, make a note of that too. You might be able to include the interest you pay on that home mortgage as part of the amount that you're able to claim for forgiveness. Rent, not just office rent, but rent you might pay because you lease a car or a copier. So anything that you lease, rent was used in a broad term here. So anything that you pay for on a monthly basis for the right to use is rent, not just office space. Utilities, so phone, internet, all that kind of stuff, and interest on any other debt that you incurred before February 15th, 2020. So line of credits, credit cards, etc. So again, you're going to have 8 weeks to spend this loan that you got on essentially payroll costs, mortgage interest, rent, utilities, and other debt. After that 8-week period, you're going to calculate what you actually, the cost you incurred and the payments you actually made. So it's on a cash basis accounting. And that amount is the amount that you're entitled to for forgiveness. That forgiveness is not taxable. So you don't need to worry about paying income tax on that amount that is forgiven. So that's how the federal government is funding money through our businesses to our employees. They're incentivizing us very strongly to keep our employees, to keep them on payroll, and then forgiving the loan for us. That's how they're trying to distribute money. You know, a lot of talk's going into $1,200 isn't a lot of money. $1,200 isn't a lot of money because this is where a lot of the money is coming from. Remember earlier I mentioned that $10,000 EIDL grant. If you get the $10,000 EIDL grant, that counts against your forgiveness. So you cannot claim full forgiveness of this payroll protection program loan and $10,000. Your PPP forgiveness amount is reduced by the $10,000 grant if you take the grant. There's also some provisions in here that if you reduce the number of employees or reduce your pay, it reduces the amount of forgiveness you're entitled to. So if you have a situation where you're reducing their number of employees over the next in this time, you really need to look at how this applies in those reductions. There's also the flip side of that too, is that if you've already laid people off and you hire them back, the government's going to reward that. That can be seen as that's a benefit to you, and you'll be able to count the payments you made to those people you laid off as amounts that can be forgiven. So basically, if you lay people off in this point in time, you're not going to get the full benefit of forgiveness. If you bring people back that you fired in the past month, that may not count against you. Okay, so you got this loan. We figured out that it was forgivable. What about the balance due? You got a $50,000 loan, only $30K was forgivable. You got $20 balance due. $20,000 still due. What does that mean? That amount is going to be converted into a loan with a maximum term of 10 years and a rate not to exceed 4%. It doesn't say what the minimum term is. It just says there's a maximum term. So that term is going to be discussed and negotiated with that lender, with that small business. Okay, so what's the catch, right? Like, oh my God, I'm getting so much money. This sounds too good to be true. I think here's the catch, and this isn't in the law. This is just from reading a ton of opinions on this. Only $349 billion was appropriated. Only $349 billion. Sounds like a lot until you look at some statistics that say there's 30.2 million small businesses in America. If I take $349 billion and divide that by 30.2 million small businesses, that's only $11,000 per business. Again, that's going to go up and down, and some businesses that it's going to be a lot of money for them. Other businesses, those of you that have $100,000 in payroll, $11,000 is not going to be a whole lot. So that, I think, is the biggest catch, is that they've appropriated this money, and it may not be enough. Now, I did listen to a call with a couple senators last night, and they did indicate that they attempted to set up this scheme in a way that if it works, they can just appropriate more money to it. So if the situation continues to go on further than April, if it goes into May, June, July, I think there is a thought that they can add more money to it. And look at that. Guys, I see you're also putting questions in the chat. Please drop those questions into slide.do and P313. That way other people can vote on them and we can get to the most important pressing questions. It's going to be hard to answer a lot of individual questions and questions that are specific to you. Right now in this call, we're trying to give everyone a good broad overview so you're confident going into this program. So if you have those questions, go to that slide.do and type in P313. Okay, so we went through the PPP. Now here's something else that's coming up. There's also an employee retention credit. You might hear about this. It's the employee retention credit. You are not going to be able to pick both the PPP and the employee retention credit. They're two different things, and you can only pick one or the other. So that's what you need to be aware of. And why would you, if the PPP is so attractive, why would you want the employee retention credit? Well, first, if you have more than 500 employees, the PPP doesn't apply to you. So it applies to those very big businesses, but again, I don't think any of those businesses are on this call. The second reason you might apply for the employee retention credit is that there's no cap on that. There is a cap of $349 billion on the PPP. So if, for whatever reason, the the local banks burn through that $349 billion and there's no money left and Congress doesn't appropriate more, this employee retention credit is going to be the credit that you should avail yourself of. Again, I think all of you should probably look at the PPP first and then go to the employee retention credit, or if it's not available. Again, all of you would be eligible for this. Sorry, not all of you, but if your operations are fully or partially suspended due to government orders, you'd be eligible for this employee retention credit. I suspect that's a lot of us. Also, 501c3s are included in this as well. There's also a calculation based upon your gross receipts and how they've decreased over the past quarter, year-over-year quarter. So again, having your financial statements in order is of utmost importance right now, because you're going to need to show, if you want this credit, how your how your revenue has dropped from this. The employee retention credit is a little bit more complicated than this, but we boiled it down to this. It's essentially a $5,000 per employee credit against Social Security tax. So what's going to happen is you can delay making Social Security payroll tax payments until January 1st, with 50% owed on December 31st and the balance of it owed on December 31st of 2022. So you're going to be allowed this credit. That's a credit against the Social Security tax you would have paid as an employer, and you just pay that Social Security tax later. So that's the employee retention tax credit. Finally, this is one thing that I think just everyone should be aware of, is that the CARES Act did create a $300 above-the-line charitable contribution deduction for filers taking the standard deduction, and expands the limit on charitable contributions for itemizers. So if we think that we're hurting as profitable businesses, you have to imagine that 501c3s and charities are probably hurting even more because their donors are all affected. So the CARES Act creates this $300 above-the-line charitable contribution on your personal income tax return. So just be aware that that's out there. Give NOLA Day, y'all, is May 5th, 2020. A lot of you on this call are in New Orleans or in Louisiana, and probably have connections to nonprofits. But just keep that in mind on that May 5th, especially if things start to pick up in the next month, that charitable contribution of $300 could be an attractive thing to you. So now we're going to jump over to some questions, and kind of goes through some of these. Again, I'm going to start with the kind of just the highest asked questions. Can I do both SBA, PPP, and IDL? The answer to that is yes. And actually, in the way this question is asked, SBA, IDL are the same thing. The SBA loan is the Economic Injury Disaster Loan. Those are one and the same. Economic Injury Disaster Loan, apply for it at SBA.gov. PPP, apply for it at your local bank. Yes, you can apply for both. If you get the benefit of the $10,000 grant, it reduces your forgiveness. The second part of the question is the first 6 months of SBA loan currently in underwriting paid by the SBA. I'm not sure. If you're in underwriting right now for a loan, you might be a little bit, good news for you is that you probably already have a good open door to an SBA lender and can get in them with as quick as possible. So I would direct that question to whoever you're working with as an SBA lender. Again, the nuances of this are going to be coming out. How does this package help small businesses with contract workers? Contractors are included as part of payroll costs. So everything I just talked about as employees generally will also apply to independent contractors. I'll make this broad caveat too, is we see businesses all the time that are improperly paying employees as independent contractors. In other words, they have an employee, but they're paying that person as a 1099 independent contractor. People do that because it saves them on payroll costs. I can tell you that time and time again, that comes back and bites business owners in the butt. If you have people you're paying to do work for you, you need to look very seriously. You need to assume they're employees unless you can figure out a reason that they're not. Because we have a few clients right now who are in this situation, and it's hard to figure out, okay, well, you've got somebody who's actually an employee, but you're paying them improperly, so how does this law all apply to them? It just makes things a lot more complicated than they need to be. So if you're paying people, again, you want to assume they're employees unless they're independent contractors. But at the same time, this law does appreciate the fact that a lot of people do that and is not hurting those people who are 1099s. Is there a revenue income threshold above which a business, including sole proprietors, are not eligible to participate in the CARES Act programs? Not that we've seen. There is this $100,000 cap. So far, the way I read it, again, I think it's not, Vincent and I talked about this a lot, is we think that that's a cap on income. So for the purposes of calculating some of these things, your income is capped at $100,000. It's not an exclusion saying if you're making more than $100,000, you can't apply. So I don't think there's an income cap. There is a cap on the amount of the loans. So if you make too much money, you might be capped on that front. But no, this seems to be in general that it's open to everybody. Anonymous just purchased a landscape company. We're handling all of this lawn maintenance accounts. We just started 2 weeks ago, but we'll be able to qualify. The answer is it depends. When you say you purchased a company, the operative date for this is that the business had to be in operation on February 15th, 2020. It qualifies. The calculations change if the business was not in operation on February 15th, 2019. So if you just purchased a lawnmower and a list of accounts, then and you did this last week, you might be excluded from some of these things. If you purchased a stock purchase and purchased an LLC that's been in operation for 10 years, then it might apply to you. So again, it's hard to kind of get into more specifics there about what's going on there. But again, I think some of the advice here is apply, 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 apply. We haven't seen any downside or negatives necessarily of applying yet. New unemployment benefits could be more than what some of my employees make. If I offer them their job back, can they decline? I'll be honest, we haven't looked at how the unemployment benefits totally work in this. And the reason for that is we wanted to understand how this would apply to business owners specifically. I get that some of you as business owners need to know how you would apply for unemployment benefits. I think that's probably a separate talk that's aimed at people who are employees, not business owners and managers. Here's also the general question that I would give to folks who have questions about whether or not we have a few unemployment questions in here, is tell them to apply. Go to laworks.gov or .net and apply to the state of Louisiana for unemployment benefits. They've been expanded, and they need to apply for that. I'm not sure on if we are service-based business for the economic injury application, can we report cost of revenue instead of cost of goods? That's a good question that I'm honestly not sure about. People that are helpful on these, anything to do with the SBA or Louisiana Small Business Development Center, LSBDC, they are probably extremely busy right now, but those are the experts in terms of applying for SBA loans. That's a question we can mark and try to follow up on and figure out if there's any more guidance on that. This is a great question right here. Paycheck Protection Program. My company is an S-Corp. My salary is low, but I do take monthly profit draws. How do I include the draws in the PPP calculation? I don't think that you necessarily can. And here's kind of the bad news there is if your company is an S-Corp and you take a salary, remember that you're required to pay yourself a reasonable salary. A lot of us want to drive our salaries down because we lowered our employment tax and we pay less employment tax on this. Well, that's now coming around and kind of biting us here. If your salary is artificially low and you're taking draws, I haven't seen anything yet that says that you can include those draws as part of your cost of the Paycheck Protection Program. Again, work with your bank to do that and talk with your lender. But I'm not optimistic that draws to an S-Corp owner would qualify as a calculation that would get into that. Next question, so if I take the $10,000 and get $50,000 from PPP, then only 40 of the PPP will be forgiven and $10,000 will roll into a loan. Is that correct? That's the way I understand it. Yeah. So if you get to a calculation where you have $50,000 is the eligible amount for the PPP, and you take the $10,000, then yeah, it's $50,000 minus $40K is the amount of forgiveness you're eligible for. That's exactly it. The idea is that you're not able to take a double benefit of $10,000 plus the forgiveness of the PPP. If you bring back employees, will you be required to bring back all of them in order to receive any of the payroll credits? I don't think it's an all or nothing approach. The way I read it is that it's a pro rata approach. So if you bring back some employees, you're going to get the benefit of that, but you're also going to have to look at percentages in some way in terms of it's not an all or nothing, I think is the short answer there. No, you don't have to bring back everyone, but you are going to have to pro rata look at how your workforce was reduced, and your amount of forgiveness will be affected by that. I think the same question kind of comes in below too. If you already have laid off employees, would you be entitled to payroll credits if they are brought back? Yes, there is some timeline that you need to pay attention to there. Vincent, if you know that, I'll let you chime in on that. I believe there is specific timelines of when you have to bring those employees back by. We'll see if we can look that up for you quickly here, but just be aware that if you've already laid off employees and you want to bring them back, there are timelines to do that. There's deadlines you need to comply with there. We pay our employees based on how many clients they see. Hey, Sarah, if a substantial number of clients have dropped off, can we use the funds to make our employees whole? Yeah, I think so. I don't think there's necessarily the PPP is not concerned with your compensation scheme. The PPP is going to say how much have you paid those employees on average over the past 12 months. That's what you're entitled to. And then if you use that money to pay them their salary, it'll be forgiven later on. So again, if you know your averages, if you say, hey, look, I paid this employee on average $5,000 a month, and I use that to calculate my PPP, and then I continue to pay them $5,000 a month, I think that seems to be something that is what the intent of the law was. Can you send out the recording? Absolutely. We'll probably get the recording transcribed too and put up on YouTube as well. So we'll probably do that, is get it recorded with some closed captions and that sort of thing. Thanks, John. Is the future of the business in doubt? Is it wise to take on these loans? That's a loaded question. That's a bit hard to answer, Leonard. But a good example of it. You know, if you go after the EDILs or the Payroll Protection Program and you're not able to get the forgiveness, you know, you might have to figure out another way to pay back that loan. Keep in mind that under the different loans, the SBA loan typically does depend on your credit and may require some collateral. The PPP is no collateral, no personal guarantee, no interest. So we want to look at it in a little bit more detail, but if you take your loan as an LLC and there's no personal guarantee and no collateral and no fees, be aware of that, go through that. But if you have an LLC, that's kind of the purpose of an LLC. It might just be a bunk loan at that point in time. So again, that's going to be kind of become more of a personal business decision. If our employees chose to stay home prior to the mandate and they have filed for unemployment, are we still required to pay them the sick leave beginning April 2nd? I think that's a good question and goes into whether or not they were formerly fired and let go or not. I don't necessarily know the answer to that. I think if they chose to stay home prior to the mandate and they have filed for unemployment, this kind of goes back to the issue of making a list of your employees and why they chose to stay home and what they might be entitled to under the sick leave. Also, I think it's worth calling some of these employees, y'all. I think a lot of these conversations are going to be having a lot of one-on-one conversations with your employees. Part of what the intent of this law is to help us maintain our workforce so that the economy is roaring and ready to go when the stay-at-home orders are lifted. So I think you might have to get with your employees and say, hey, look, you can stay at home and you can stay on unemployment, or I can bring you back and I've got this credit that I can pay you with. We are also going to email you out the Family First Coronavirus Response Act poster that you need to post in a conspicuous place. You can also email it or post it on an internal message board wiki. I did that for my team last night. But there is a poster for them that explains their benefits, much like the labor law posters for everything else. So Jesse, let's add that to the follow-up to this email. Will you provide these questions and answers after the call so I can refer back to them? Yeah, we're going to do a recording and get that out. Again, I think we're probably going to do another call, if not next week, the week after. A lot of this is still up in the air. This is a fast-moving situation, and we're going to learn more over the next couple of weeks about how this all works. So I'll just answer that. My questions today, the answers to my questions today could change later on. If my part-time employee files for unemployment with her other job with more hours, is she allowed to get UI benefits? Here's what you tell your employees who are asking about unemployment. Tell them to apply. If they've lost money or a job, tell them to apply for unemployment and just end the advice there. That's it. They'll go apply, and if they get the benefits, they get the benefits. If they don't, that's between them and the unemployment office commission. But it seems like Congress has expanded the benefits available and the definition of who's unemployed. But here's the easy thing. An employee asks about unemployment. If that's what they want to do, then allow them to go apply. Gig economy workers can apply for benefits. We can get into more details of I think we kind of went into that a little bit, John. For people who bought businesses in the past who report revenue and COGS from when the previous owners had it, yes, because it's not related to you as an owner, it's related to the business itself. Not sure about the credit worthiness of the applications themselves. Not sure specifically on that, again, other than apply. Are these loans dischargeable in bankruptcy? Not sure about that yet. I think there is something in the law about that, but I'm unsure of the specifics there. If you don't bring back employees, or the things you spend on rent and utilities and other items allowed forgivable? Yeah. So the amount of forgiveness is equal to the cost of payroll plus rent plus utilities plus other loans, etc. So even if your payroll goes to zero and you spend it on those other things, you should still be able to avail yourself of some forgiveness. Can a sole proprietorship have their own income, net profit from their business provided through the PPP? Yes. The way I read it is, in short, yes. I think it's a little bit more complicated than that, but have your paperwork together and in a position where you can answer that and give your lender that amount. The 12-month payroll period start, I think it is from the date of application. I don't remember that specific, but I believe the 12-month period in terms of when you're eligible for how to calculate your PPP is 12 months. So if there's any, I'll wait another minute to see if there's any new questions that pop up in here. But otherwise, y'all, that's all we got for you today. That's our understanding of how some of this applies. For our current clients, we'll be working with you and happy to get with you on strategizing this and figure out how and what you might apply. Again, just to recap, the SBA Economic Injury Disaster Loan, you can apply for that today. The PPP loan, as far as I know, there's no applications out just yet, so look for that soon. And y'all, you're welcome for doing this. Thank you so much for attending and being here. It honestly feels great to put as much work as Vincent and I put into this over the past 3 days, and to have so many of y'all tune into this. And so we'll be trying to do this again.
Andrew, before we go, the question about the rehiring of your employees, I was able to find out that if you rehire your employees before June 30th, that will go towards the forgiveness portion of that IDL grant or the loan.
Awesome. Yeah. Okay. So that's a long time period.
June 30th.
Rehired by June 30th.
Right. So any money. So if you bring your employees back before June 30th, that the amount that you pay them will go towards the forgiveness of the loan.
Okay. So there's a long time to bring back workers. I think that's probably to give people a chance to get the PPP and get the money in place. So that might be part of the idea here, y'all, is that it might take until May or June to actually get some of this money from the PPP. So that might go into it as well. Is if you don't have the cash to pay them, it might not make sense to bring them on, let them get the unemployment benefits, and then when you have the cash to bring them back, bring them back. All right, y'all, we're going to end the recording and we'll get this sent out. Thanks so much.